Hello everybody, I'm John, this is JP Strategic Investments, and today I'm going to talk about 3 stocks that surprisingly might not exist in 3 to 5 years. Now these stocks actually right now are performing pretty well. Again, these aren't stocks that are obviously going bankrupt. These are stocks that maybe people right now think they're going to do well, but very likely in my opinion, in the next 3 to 5 years, these companies will be in a lot of trouble. So let's get right into the first stock here. The first stock here that we're going to look at is Autozone. Now, Autozone, most of you guys probably know what Autozone is, what they do. Basically, they're mainly a US company that sells aftermarket parts for anything related to automotive vehicles, things like that. The problem with AutoZone is that most of the products they sell, in fact, almost all of the products that they sell, are solely related to gas-powered vehicles or ICE vehicles. They have very few products that are actually relevant to electric vehicles. And so as electric vehicles become a larger and larger part of the overall vehicles on the market and on the road, AutoZone is going to have less and less sales. And I think most of you guys would agree with me that electric vehicles are probably going to be the future, at least in the short term, and at least they're going to be a large part of all vehicles sold. Maybe not all vehicles sold, but they're going to eventually make up a large part of the market 5, 10, 15 years in the future. That means that AutoZone is in trouble because that means that the vast majority of the products that they sell won't be relevant to any of those vehicles. And on top of that, the worst part is that electric vehicles don't really have a lot of moving parts. They don't really need a lot of maintenance. So it's not like AutoZone can just transition to selling parts for electric vehicles because there will be much, much fewer parts to sell, if any. Really the main things that you're going to sell for electric cars are anything related to, headlights, brake lights, body, things like that. But as far as anything under the hood, all of that pretty much goes away with electric cars. So the revenue and the profits that are coming in right now for AutoZone 5, 10 years in the future are going to be much, much, much lower as long as electric cars are able to gain more and more market share. So if you believe that electric cars are the future, if you believe that the market share for electric vehicles is going to dramatically increase over the next 5, 10 years, then AutoZone is probably going to take a huge hit as a result. Some examples that this is already happening is another kind of similar chain, Pep Boys, that some of you guys may have heard of as well. Pep Boys has stores that are very similar to AutoZone. They also do, unlike AutoZone, some maintenance shops as well and things where you can bring your car in to get it fixed. AutoZone pretty much just does actual selling of parts. But Pep Boys actually is closing tons of its stores. In fact, I just heard recently that Pep Boys is closing all of its retail locations nationwide, and they're only leaving open their tire centers and maintenance centers and things like that. This is an example that this is already starting to affect some of the chains and some of the businesses in AutoZone's sector. Now, with that said, AutoZone could actually continue to do well in the short term. With a lot of people, if they're maybe wanting to buy an electric vehicle as their next vehicle, they're probably going to stick with their gas vehicle maybe a little bit longer until the point where they can buy their new electric vehicle. That means that vehicle is going to need more parts, more maintenance, and especially a lot of the rental car businesses that have contracts with AutoZone. AutoZone actually has a lot of commercial contracts with rental car businesses and things like that. Those have been buying used cars like crazy recently. Used cars need a lot of maintenance, right? Need a lot of extra parts, and AutoZone is able to fulfill the needs of those rental car companies. That means in the short term that they could continue to do well. So if you're thinking about maybe shorting AutoZone stock, buying put options, maybe not a good idea in my opinion right now. But overall, in the long term though, looking 3 to 5 years out, based on what I've just laid out, I think AutoZone is going to be in a lot of trouble. And that goes for any stocks that are even related to it, like O'Reilly, Advanced Auto Parts, and any companies like that. So that is the first stock. The second stock that I want to get into here is Lyft stock. The main problem with Lyft here is that Lyft is kind of a one-trick pony. Their main competitor in the US, which because Lyft only operates in the US and Canada right now, is Uber. And Uber has a huge advantage over Lyft in that they have a few other segments, mainly their Eat segment, right? Or their delivery segment, where you can get restaurants, food from grocery stores, things like that. That Eat segment, that delivery segment, actually just in the last quarter brought in, I think, about 20% of their new rides customers. So that Eat segment, that delivery segment, is acting as a huge funnel to bring in new customers to Uber on top of all of the new customers that they gain just from the marketing that they do for their ride segment in general. Lyft doesn't have access to that. It also means that if we do have any other scares, lockdowns, variants of COVID that would put us back into any situation like that, Uber is going to be able to ride out that storm much, much better than Lyft is going to be able to do so. Now, the other main problem with Lyft is I think that we will eventually see autonomous vehicles. Now, it is going to be sometime in the future, but I think it will happen. And I think it will start probably with maybe short distance rides. In maybe some major cities, you'll have autonomous vehicles that just operate within those cities, bringing people around to different restaurants, businesses, things like that. That is going to affect Lyft a lot more than it's going to affect Uber, because Uber will be able to lean back on their Eat segment, delivery, their freight segment, all of which really at this point, and even when you get to autonomy, still will need someone to grab that food, grab those groceries, sign for anything that's being picked up as far as freight goes, and a variety of things like that. So Uber is going to be able to ride out anything like that much easier than Lyft is, and this will likely hurt Lyft enough to where they really won't be able to make a profit. And in fact, they only achieved EBITDA profitability in the most recent quarter. Uber's ride segment has been profitable for some time now, barring some of the quarters during the worst parts of COVID. So Lyft is really not in a great position here to kind of weather any of the headwinds that are going to be coming towards it with autonomy and with Uber's competition, especially with their advantages of those other segments that they have. Now, the last stock on the list, and this is where I'm probably going to get the most hate, the most controversy from this video, is AMC stock. And the reason that this stock is on here is because the only bull case for this stock right now, the only legitimate bull case, is a short squeeze. Long term, this stock really doesn't have a lot going for it. If you look at the numbers for movie theaters, this stock was having trouble long before COVID. If we look at this graph here, basically this graph shows tickets sold in blue over time and the actual box office earnings in red over time. Now you can see box office earnings have actually been going up over time, aside from the sharp decline during COVID. With that said though, ticket sales have been steadily declining since essentially 2002, 2003. The only reason that the income from box office sales has been going up is because of drastic increases in prices and because this graph isn't actually adjusted for inflation. But we can see that movie theater attendance has been declining steadily since the early 2000s. Another thing we can look at here is AMC's stock chart. If we look at the stock chart, we can see that they have been in a downtrend since late 2016, December, October of 2016. By the time COVID actually hit in 2020 here, they had already dropped from about $33 a share all the way to around $7 a share. That's over a 60% drop even before COVID. And then obviously you have the portion here where there's this giant short squeeze. Everything with GameStop was going on as well, and a variety of other factors contributed to that. But the downtrend and the decline of the stock happened well before COVID even happened. The other thing that we need to look at here is they started to report quarterly losses even as early as late 2017, which means, again, their business was well on the decline even before COVID actually happened. And now the company is still losing money, and there's no sign that movie theater attendance is going to somehow dramatically increase anytime in the future. So the only thing at the moment that is propping this stock price up right now is the potential for a short squeeze. And there very well could be potential for even more of a short squeeze to happen with AMC. I'm not saying that that's not possible. What I am saying is, though, that the underlying business is essentially dead. There is really no way that AMC can possibly recover from this, aside from drastically changing their business model or seeking to be bought out by another company or merge with another company. There's really no way other than that for them to recover at this point, in my opinion. So those are the stocks that right now I think are in a lot of trouble or could be very soon. Let me know in the comments below what your thoughts are. You can tell me all about how wrong I am about AMC. If you guys can convince me that I'm wrong, I am more than willing to do another video explaining why I was wrong and letting you know why I agree with your theory. Other than that, I will see you guys next time and have a great day.